Alright, so I just wanted to make a quick update video. Obviously I did some analysis yesterday on Bitcoin. Yesterday we were hovering over here on the 0.618. I said if we were going to have a reversal, we would need to hold the 618. Worst comes to worst, the 786 down here. I actually said yesterday if we break below the 61.8 right here that I would be taking a short if we closed a 4-hour candle, came back up and confirmed it, and as you can see we came down, came back up, basically confirmed it and broke down. So I'm currently in a short right now. I actually have my take profits, I'll mark it on here, literally round about this line here. I haven't put it all the way down to the next fib level, which is the 2.618, just in case Bitcoin decides to fake out and follow the path of the most pain, which is what it normally likes to do. It likes to liquidate all the bears, or liquidate all the bulls, sorry, probably have a fake out, liquidate all the bulls as well. So there's a couple situations or a couple scenarios that I'm looking at right now. Obviously yesterday we talked about the correction size. If I can pull it up, I think it's around about 54% from here. Yeah, 55% from the top in April, from the April May. If we come back, if we draw from the top here, 56% would kind of perfectly line up around this 2.618 around here. So I mean we still do definitely have some support around here. Another thing I wanted to show you guys was the Bitcoin shorts. It looks like we're starting to push up right now. It's not normally a good sign if we get shorts past this. We definitely could come up, roll over with the shorts and go back up again, but obviously like we did here, we did here, and here a few times. But as you can see, if we zoom out a little bit, every time we normally get wicks above here, the shorts normally go to the moon. So I'm definitely looking out for the top of this resistance box up here. Honestly, I wouldn't say bear market until we're above here, but if we do start, if the shorts do start breaking out above here and going to the moon, it does look like we're going to be coming back down to the 2.618. Worst case, probably bleed out until we decide to make a turnaround. So there are a few other things that I wanted to show you. Obviously yesterday we looked at the percentage wise dips. I want to show you as well a pattern that I noticed. So we've got like a descending wedge type pattern here, which is obviously a bullish structure. The price target would be at the top of this over here. So if we just take a measurement tool, you can see that the price prediction for this would be about a 69% increase. But honestly, I mean, the more and more we go down, the less and less likely we are to hold this. We're currently pretty much at the bottom of this descending channel right now, or this descending wedge, sorry. Another thing as well, a big macro pattern on the daily. If we come out, you can see we had this shoulder, head, shoulder pattern. So head and shoulders, which is obviously a bearish pattern. If I draw it over here for you guys, oh shit. There we go. You can draw this a few different ways, but even if you draw it from the conservative point, so at the literal bottom of these wicks, you can see that we did break out of the bottom of this head and shoulders pattern, and what do you know, again, we've got another shoulder over here, which is obviously a bearish pattern. And you can see again, we've broken down below it, similar to how we did here. We've broken below the head and shoulders structure. I wouldn't get too bearish until we do break out of the bottom of this descending wedge here. If I draw it down here, let's say, where's my tools gone? Oh, it's not on this one. So we could bounce from the bottom of here. If we do bounce and put a lot of volume in here, I would probably cancel my short and put in a long position. The problem that I'm seeing is there's a lot of bearish signs, especially in the stock market, the SPY. If I pull this over, if we get rid of this moving average and put it to the 200 daily, you can see that we've just broken below this, which is not good. Not good at all. No matter which way you slice it, this is not healthy. If we come back on the SPY, which is the ETF of the stock market, if you didn't know, you can see that every time we bounce here, we go higher, we bounce. Whenever we start coming below here and rejecting the 200 DMA or the 200-day moving average, we normally have a massive flush out. You can see here we had December 18 and March 20. These were both massive crashes for Bitcoin. So if we get rid of the 200-day, if we put it on the 200 weekly, you can see that we do have we are very extended from our 200-day moving average. We're very far away from our moving averages right now. If I just take a simple price chart, that is about a 25% by the time this comes up here, which is not good for Bitcoin. Needless to say, if we came anywhere near here, Bitcoin would be absolutely crashing. So also, yeah, one last thing I want to talk about is the RSI. So if we come out here to the daily RSI, you can see every time we break below this 30, we normally have a slight capitulation. You can see here we broke below, where is it? Yeah, right here we broke below 30. We had a big capitulation, wick, and that was basically the bottom. I mean, we came back and back tested it and filled in that low down here, but that wick down here was basically the bottom. Anytime you buy a 30 RSI, or even down here, if it comes down here, it's normally always the bottom. Like I said over here as well, you can see that as soon as we break below that 30 RSI, we have normally a big liquidation back to the 200 weekly moving average. Let's see if I can find anything else of it. You can see there was a dip here. But yeah, I mean, macro term, or the near term, it is looking slightly bearish. I would not be surprised if we came back down. We're still making lower highs on the lower time frames. I do still have my short open. I have my stop loss pretty much break even over here at the 61.8, and I have my take profit once again roughly midway between these 2 points over here, roughly about $34,000. So yeah, that's what I'm looking out for right now. Once again, none of this is financial advice. These are just my opinions on the market, and you should always do what's best for you.